Hello traders, looking at CRSR, Corsair Gaming, peripherals basically, and other cool stuff. I went to their store. I find it hard to go to their store and not buy something, so I rarely go there on purpose. Anyway, the reported earnings and the reaction is negative. They're off the lows. So let's see if there's an opportunity there. This is a 4-hour chart. Let's go to a daily chart and reset things. This is a stock I recently wrote up a trade on, and I would do it again now, only from a lower level. So whenever somebody goes into an earnings report, they should expect the unexpected, meaning short term, regardless of the quality of the report, the move has to do more with the expectations than the actual event itself. You don't believe me, I know you're rolling your eyes, but let me prove it to you. I've said this before. Consider, I don't know, take your pick. Apple, Google, Facebook, Amazon, all the big guys. They haven't reported a bad quarter in years. Yet, if you look at their reactions, they're about 50-50 up and down on the earnings reactions. So if it's about the earnings report, they would all be up reactions, but they're not. So let's just put that to rest. The short-term reaction on the earnings report, it is based on more so to do with expectations. So, and sometimes they read the wrong things. Like here, it missed on earnings. So is it a growth company or not? If it's a growth company, then who cares? The fact that they're growing sales, that's their goal. So let's look at, and I did peruse the report. They beat top line by about 25%, and they increased a whole bunch of stuff. So the only disappointment, I put disappointment in quotes, cash flow from operations or something was lower than last year. But what I'm looking here is just a snapshot. And it looks like the revenues are growing in the right way, profit margins are going in the right direction. And this is COVID year that's shown here. Then, let me see, quarterly. All right, so that's quarterly. So same thing, profit margins is going in the right direction. Debt to assets is going in the right direction, those orange lines. So there isn't a terrible story. It's more about what were they expecting. So just look at this. This is the quarterly P&L statement. It doesn't lie. Revenues, 380 million, 530 million. So now they have a revenue, what is it on an annual basis? All right, so it was 4 years ago was 850 million. Now it's 1.9 billion. Okay, COVID helped, but it is what it is. All right, so net income is 148 million on the trailing 12 months. So the quarter maybe was worse, whatever they gave it, reported 46 million. It's not a bad quarter. So it's all about the expectation. So having said that, and the bigger problem is assuming the markets are not toppy. Okay, they are. Let's assume they hold up and there's no correction coming. Then these comments apply. Okay, so it has put a bottom today inside of a cluster of support that dates back to last year. So if I zoom back, this is a cluster that was the base for this. Is this a Reddit stock? I don't know what this was all about. But so this cluster of support, this candle speaks volumes. The base of it. It's a long tail. It means they didn't even want to spend a minute down here. Not here. This is like the lowest stomach candle. So there's a lot of support down here. Whoa, what is that all about? That's the good news. What's the bad news? It's that orange line. So this is the volume profile right here. That tells me this is the line they should have held. It was the busiest line for the last, the history that we're looking at. So the fact that it's above current price becomes a problem going back in. So as they rally, if they rally, they're going to hit a lot of potential sellers because that is a very drastic line from the volume perspective. Look at it by a mile. And this is not a line I drew. It just, that's the platform gives it to me. It calculates. I'm zooming in. It just calculates it. So if I go to a 60-minute chart, it's going to give me a different perspective. But still, overhead. They shouldn't have done that. Once they did that, now they have to deal with the problem on the way back up. So where are the problems? If we assume there's a floor below, then we should look for the problems above. Oh, beautiful gap. Everybody chases gap. Yes, but I think it's not going to be easy filling it. So 28 and change will get you to fill the gap. And once you fill the gap, you're going to hit immediate heavy resistance from this orange line, which is the volume point of control. Never mind the fact that if you look at it, it's a descending channel. This is a 1 hour chart, so these are shorter term comments. Forget the longer term prospects of the company. For a while now, it's been descending. So if it pops and fills the gap, it's at the top of that channel. So the assumption is it may do the same and revert lower. So if I get long here, I should remember to trade part of it and lock some profits up here, assuming that it's going to fail. But every failure becomes an opportunity. So the first opportunity clearly is to fill the gap, but this is the doorway. And if this happens, then you have a huge cluster of resistance. And then that's the next opportunity, also resistance. So this will be a problem until they take it out. And then boom, that's be the next problem. And that's even bigger, it's twice. So repeat, rinse and repeat. Backing up. Big picture, good company, decent P&L, we just looked at it. Bad report? No. Bad reaction to the report. Therefore, expectations are weird. So all depends on what the quote experts come out and say and defend it, or downgrade it or reiterate whatever they say, may move it one way or another. But price action is what it is, and we just discussed it. Now, what is the potential problem with hitting resistance? So technically, when a stock loses a neckline, it carries lower. So it's not a perfect head and shoulders, but one could argue that there was a neckline loss already up here, and it should fall as high as this weird poke, but I'm not going to give it all of that. So I'm still okay ignoring that poke. Therefore, this could have been where they were hunting anyway. Now, repeat the process at here. So the bulls need to recover 28, 29 quickly so that this doesn't become a neckline and then hunt 2022. What? Yeah, well, this is a really big support level down here, but hopefully they don't have to resort to using it. Oh, I do have lines. Okay, forgot about that. So there, I'm consistent. This is a cluster base support. Stop out. Well, that's because that's what could happen, and I had assigned it down to here maybe. So buy the dip opportunity with a tight stop, that clearly didn't work, and so we can take that. Now I'll leave it there for visual reference. And so there it is. These lines just reaffirm what I just spoke to, the fact that they were important necklines to hold. They failed. Now what do they do on the bounce back into those lines? Clearly the stock can rally. So the one thing I wouldn't do is short it because, oh, it's going lower, it lost the neckline. That's what I wouldn't do. I would be looking to get long at what level and swing trade it, fast trade it, or invest in it for the long term. Shorting anything in this market is just crazy. You can throw a dart basically to make money on anything in the market, but you're going to have to work hard to lose money unless you're shorting stuff left and right. Next, signing out.